Right now, there is a company sitting on $1.5 billion in cash, quietly building autonomous robot armies and AI-driven drone catchers.
Which is, I mean, it's an unprecedented setup.
Exactly. Wall Street analysts are aggressively pounding the table, swearing this stock is going to double. But if you look at the other side of the trade, investors have borrowed over 160 million shares to bet heavily that this entire operation is just a complete illusion.
Yeah, you are looking at a ticker that has completely abandoned traditional market gravity. It's a high-stakes financial war zone right now.
Welcome to today's Deep Dive. Our mission here is to tear through earnings call transcripts, financial databases, corporate strategy readouts, all to answer one massive question for you. Is Ondas Inc., ticker symbol ONDS, the undisputed future of autonomous defense? Or is the market pricing in a massive technological mirage?
We have to look at the raw mechanics of both sides here because the market polarization is, it's historic. I mean, Ondas is up over 1,000% in the last 52 weeks.
1,000%.
Right. It's hovering around a $10 valuation, yet the analyst consensus average target price is almost $20. That implies a near 100% upside from today.
But the counter-narrative, that's what makes this so fascinating.
Exactly. A staggering 34% of their tradable shares are sold short.
Which means a third of the market is literally paying a premium to borrow shares, sell them, and just pray the price crashes so they can buy them back cheaper. You simply do not see that level of aggressive institutional optimism colliding with that level of targeted pessimism in a single stock.
You don't. It's rare.
So, to understand why hedge funds are smelling blood in the water while analysts are buying VIP tickets, we have to start with the single metric driving this entire debate. The revenue explosion of 2025. We know they're growing, but what does an explosive year actually look like on the balance sheet for a defense tech company?
Well, it looks like a fundamental rewiring of the business. Full-year revenue for FY25 hit $50.7 million. Yeah, that is a 605% jump year over year. And the momentum is heavily backweighted, too. Q4 of 2025 alone delivered $30.1 million of that revenue.
So more than half in just one quarter.
Right. And here's the contrarian insight that most casual observers miss. This growth has almost nothing to do with their legacy operations. They transitioned from a legacy networking portfolio into a scaled autonomous defense business practically overnight.
So the new tech is driving the bus.
100%. The Ondas Autonomous Systems segment, or OAS, was responsible for nearly $50 million of that total.
That brings us to the valuation, which is where the math starts to look pretty dizzying.
Yeah.
Ondas is sitting on a market cap of $4.82 billion.
Yep.
If you run their forward price-to-sales ratio, which is essentially, how much of a premium you're paying today for every dollar of sales they're expected to make tomorrow, it sits at 7.35.
Which is high.
Right. Contrast that with the industry average for their competitors, which is 2.43. They are trading at a 114% premium above the industry baseline.
Because the market isn't pricing an Ondas based on what it is today. It's pricing the trajectory. I mean, when top-line revenue multiplies by 6 in a single year, traditional valuation multiples just snap.
They break entirely.
Exactly. Investors are paying for hypergrowth. AI analysis from our financial database sources suggests this premium might actually be sustainable, provided the growth curve doesn't flatten.
Let me push back on that, though, because paying a 114% premium feels like buying front-row stadium tickets for a band that only has one hit single on the radio.
Sure, it's a bet on the future.
It is a massive premium based entirely on the assumption that they will keep writing hits. So here's a real question nobody's asking. Is this growth organically driven by undeniable product demand, or is there a financial engine aggressively inflating these numbers to keep the hype cycle spinning?
And that is the multi-billion-dollar question. The reality is the growth is being manufactured by one of the most aggressive capital deployment strategies we have ever seen in the autonomous sector.
Manufactured how?
It's a massive financial engine designed to buy market share outright.
Okay, let's follow the money then. Because if they are buying growth, we need to look at the war chest.
Yeah.
How much leverage is Ondas actually wielding to pull this off?
Well, Ondas ended 2025 with $594.4 million in cash.
Which is a ton.
Right. In this macro environment, that alone provides serious insulation. But they didn't stop there. In January 2026, they executed a massive equity raise, pulling in an additional $960 million.
Wait, so they're at...
They are currently sitting on a cash war chest of $1.55 billion.
Just pause and think about that ratio for a second. For a company with a $4.8 billion market cap, having nearly a third of that overall value sitting in liquid cash is an unbelievable amount of leverage. How are they deploying it?
They launched what they call a Core Plus Strategic Growth Program. Since July 2025, they have acquired 9 different companies.
9. In under a year.
9. Let's look at the sheer scale of the checkbook here. Centrix for $224.6 million, Bird Aerospace for $110 million, Roboteam for $81.7 million, and the pending acquisition of Mistral for $175 million.
Okay, this sounds like corporate Pac-Man. They're just gobbling up everything in sight. But assimilating 9 complex tech companies in under a year isn't like snapping Lego bricks together.
No, it's incredibly messy.
It's more like trying to force an Apple iPhone, a 1990s Windows desktop, and a ham radio to share the same secure group chat. The coding architectures are different, the engineering cultures clash, and the hardware fundamentally misaligns. M&A in the defense sector is a notorious graveyard for capital.
That's exactly the tension here. The broader market views that $1.5 billion cash pile as a safety net. The short sellers view it as enough rope for management to hang themselves.
Because the integration is too complex.
Right. Integrating one aerospace company with a tactical ground robotics firm is a multi-year headache. Doing 9 in 12 months is just unprecedented.
Which brings us to the actual operational strategy. If they're buying all these disjointed pieces, how does Ondas actually plan to integrate an aerospace company, a ground robotics manufacturer, and a counter-drone startup without the entire operational structure just collapsing?
By avoiding the trap of selling disparate hardware. They aren't just selling drones, they are building a vertically integrated system of systems. Let's look at the real-world deployment mechanisms our sources highlight, like the Iron Drone Raider.
Right, this is the system they recently deployed at a major European international airport. Let's dig into the mechanics of why an airport would choose this specific tech. Imagine you're an airport security director. A hostile drone enters your airspace near a runway.
You basically have 2 traditional options, and both are terrible.
Right.
Option 1 is ballistics shooting it down. But the collateral damage risk over civil infrastructure makes that an absolute non-starter.
You can't fire bullets over a civilian runway.
Exactly. So option 2 is traditional RF, or radio frequency, jamming. You flood the airspace with noise to sever the drone's connection to its pilot.
But there's a fatal flaw there, too.
Yeah, you disrupt civil aviation frequencies. You essentially blind your own control tower just to stop a rogue consumer drone.
So what does the Iron Drone Raider actually do differently?
It is an autonomous counter-UAS interceptor that relies on a kinetic net-based system.
A net.
Yes. It launches, calculates the interception vector, physically captures the hostile drone in a net, and carries it to a safe drop zone. No bullets, no jammed communications, and it executes this autonomously.
They take that a step further because that is just the airspace layer. Look at their operations on the ground. They secured a $68 million initial order with Endo Earth Moving,
which is part of a larger $140 million strategic military engineering program.
Right. Endo Earth Moving builds heavy military tracked engineering vehicles. Traditional manual armor-heavy earth movers.
And Ondas is taking those legacy platforms and injecting them with AI and autonomous capabilities. They are retrofitting heavy ground equipment into intelligent, mission-integrated robotic platforms.
So we have the Iron Drone grabbing threats in the sky and massive robotic tanks clearing paths on the ground. But having 2 cool robots doesn't make a system of systems. What is the central nervous system connecting a flying net launcher to a 20-ton earth mover?
The central nervous system is Palantir Technologies.
Ah.
Yeah. Ondas integrated Palantir's artificial intelligence platform AIP across its entire portfolio. This is the crucial contrarian insight here. Ondas isn't really a hardware company anymore.
They're a data flow company.
Exactly. The Palantir AIP creates a unified command center.
Let's paint the picture of how that data actually flows. Imagine a hostile drone enters a contested zone.
Yeah.
The Palantir AI brain spots it on radar. In milliseconds, it calculates the trajectory, commands the Iron Drone to launch and intercept, and simultaneously pings the massive robotic earth movers on the ground to clear a secure drop zone for the captured payload.
Right. No human operator has to frantically switch between 5 different software dashboards or press a launch button.
The machines are talking directly to the machines, governed by Palantir's AI logic.
And to solidify that ecosystem, they also formed a joint venture called Onenberg with Heidelberg in Brandenburg, Germany.
Why does that matter?
Because it localizes their manufacturing. For NATO countries currently obsessed with technological sovereignty, having a self-sufficient European production hub for drone defense is a massive political and logistical moat.
Okay, wait, stop. You just painted a picture of an absolute autonomous utopia. Fully integrated AI, heavy robotics, European sovereign manufacturing, and explosive revenue.
It sounds perfect on paper.
Right. If the story is that flawless, why are hedge funds borrowing 164 million shares to bet that this company is a ticking time bomb? Let's strip away the hype and look at the cold, hard math of the bear case.
We have to. Because beneath that explosive top-line revenue, the financials show the severe strain of speedrunning a tech empire. Over the last 12 months, Ondas posted a net loss of $137.107 million.
So they brought in $50 million in revenue and lost $137 million doing it. Yeah. It is a brutal cash burn ratio.
It is. Their adjusted EBITDA loss for FY25 was $31.3 million. And for anyone listening, EBITDA strips out the complex accounting noise like interest, taxes, and depreciation to show you the core operational profitability of the business.
The actual engine.
Right. A $31 million loss there means the core engine is still burning cash just to keep the lights on. Add to that, their price-to-book ratio is currently 11.24, which is 168% higher than their 5-year average.
So the skeptics have plenty of mathematical ammunition. What is the specific thesis the short sellers are writing here?
The short thesis targets 3 specific vulnerabilities. First, margins. Projected gross margins are expected to remain under 50% until 2027.
Okay, what's the second?
Second, management publicly set a long-term revenue target of $1.5 billion with a 30% margin. The bears argue that target exceeds any realistic revised estimate by 60%. It's priced for perfection in an imperfect world.
And the third vulnerability?
Regulatory bottlenecks. Autonomous systems require massive regulatory clearances, specifically beyond visual line of sight, or BVLO waivers.
Explain that for a second.
So BVLOS legally allows an operator to fly a drone so far away that they can no longer physically see it. That is the holy grail for scalable drone delivery and defense.
But regulators hate it.
Exactly. The FAA and global regulators treat BVLOS waivers like asking for the nuclear launch codes. If Ondas faces regulatory delays there, their entire revenue timeline stalls out and the cash burn eats them alive.
So the bears think the company is overpromising on future revenue, vastly underestimating the friction of integrating 9 companies and completely ignoring the regulatory gridlock.
That's the short argument in a nutshell.
But we have to counterweight this, because the analyst consensus is aggressively bullish. I mean, 6 out of 6 institutional analysts tracking the stock rate in unanimous strong buy, maintaining that $19.83 average price target.
Right. The bullish argument hinges on 2 realities the shorts are ignoring. First, that $1.5 billion war chest provides an almost insurmountable runway.
They have more liquid capital than many of their competitors' entire market caps.
Exactly. And second, there is a crucial caveat to that terrifying $137 million net loss. Our sources indicate that approximately $82 million of that loss was a non-cash warrant charge.
Let's unpack that mechanism because it changes the entire narrative. A warrant gives an investor the right to buy stock at a specific price later. Accounting rules dictate that if the company's stock price skyrockets, which Ondas did by 1,000%, the theoretical value of those warrants goes up.
Yes.
The company has to record that increased value as a liability, which hits the income statement as a massive loss. But no actual cash left the bank account.
It is a paper loss driven by their own success. The actual operational cash burn is significantly lower than the headline number suggests.
Furthermore, management has laid out a strict timeline to stop the bleeding. They project product-level profitability by Q3 2026, autonomous systems business unit profitability by Q3 2027, and full company-wide profitability by Q1 2028.
So they have a clear path charted out.
Right. So you have Wall Street analysts saying the stock is going to double because the balance sheet is misunderstood, and short sellers betting the bottom falls out because the operational complexity is too high. Distill this down for us. What is the single fulcrum that decides if Ondas hits $20 a share or goes to zero?
Execution. The thesis is entirely dependent on whether management can actually execute this $1.5 $1.5 billion M&A shopping spree.
Right.
Having the best kinetic drone, the heaviest robotic tank, and the smartest Palantir AI integration means absolutely nothing if the code bases don't talk to each other in the field, under budget, and ahead of regulatory delays.
It's all about integration.
Yes. If they execute the integration, they own the autonomous defense market. If they stumble, the sheer weight of operating 9 distinct companies will crush their margins, and the short sellers will win.
To summarize the battlefield we've mapped out for you today, ONDS is essentially attempting to speed run the creation of a 21st century AI-driven defense prime. They have the top-line hypergrowth jumping over 600% year over year. They have the war chest wielding $1.55 billion in cash.
And the tech.
And they clearly have the technological vision, weaving the Iron Drone Raider and heavy ground robotics together with Palantir's AI nervous system. But they're racing against the clock of massive operational losses and the absolute logistical nightmare of integrating 9 companies before the market loses patience.
If you remember one thing, it's this. In the new era of autonomous defense, the hardware is no longer the moat. The true competitive advantage is the data architecture that connects the hardware and the balance sheet required to survive the regulatory waiting room. Ondas is betting $1.5 billion they have both.
Which leaves us with a final, lingering thought for you to mull over as this sector evolves. As we watch companies like Ondas attempt to fully automate our airspace defense and heavy infrastructure using interconnected AI, we have to ask ourselves, are we comfortable handing over the keys to our most critical global security environments to a fully autonomous system of systems where machines dictate the interception protocols without a human hand on the joystick?
It's a terrifying, fascinating frontier.
It really is. The market is sitting at the poker table, the $1 billion is in the center, and we are all just waiting to see who is actually holding the winning hand. Thank you for joining this deep dive. Keep asking the hard questions, keep challenging the consensus, and keep exploring the sharp edge of finance and future tech. We'll catch you next time.